Hello, friend. In this video, I'll give you a tour of the most important areas of QuickBooks Online. The homepage, the invoicing workflow, the bill paying workflow, the bank feeds, and the 2 financial reports every business owner should understand. Need a specific topic? Check the timestamps in the description below. Let's start with the gear icon in the upper right corner. This is one of the most important areas in QuickBooks because it gives you access to many of your company's settings and bookkeeping tools. Under Account and Settings, you can update your company information, manage users, and customize invoices. The Chart of Accounts is where you'll find all of your bank accounts, credit cards, loans, assets, liabilities, income accounts, and expense accounts. Think of it as the foundation of your QuickBooks file. Under Lists, you'll find products and services. You can set up the services and products you sell. These items can be linked to specific income accounts, making invoicing and reporting much more consistent. If you have transactions that happen regularly, such as rent, loan payments, subscriptions, or monthly journal entries, you can automate them using recurring transactions. The Reconcile tool is where you'll compare your bank and credit card statements to QuickBooks to verify that everything has been recorded correctly. You'll also find subscription and billing here, where you can manage your QuickBooks plan, update payment information, and review billing details. That was just a quick walkthrough of the gear icon and some of the tools you'll find there. Now let's move on to the search bar and the plus create or plus new button, which are the areas you'll probably use most often throughout the day. The search bar is one of the fastest ways to find transactions in QuickBooks. You'll find it right at the top of the screen. If you click into the search bar without typing anything, QuickBooks will display the most recent transactions you've created. Now, if you're looking for a specific dollar amount, like this, or an invoice, a payment, a bill, a customer, or a vendor, simply type it into the search bar and QuickBooks will help you find it quickly. Next to the search bar is the plus create button, although yours may say plus new. Think of this as your QuickBooks command center. Most of the transactions you'll create start right here. So instead of clicking through menus or searching under all apps, you can simply click plus create and quickly access common transactions such as invoices, receive payments, credit memos, bills, bill payments, vendor credits, bank deposits, transfers, journal entries, and more. Let's start with one of the most common transactions, an invoice. An invoice is what you send to a customer or a client when they owe you money. So click plus create and then invoice. Select your customer. In this example, Amber Scott. Jot down the invoice number, the payment term. Ask yourself, is it due now or in 10, 15, or 30 days? Choose the date. We'll choose May 1st. Add the product or service, in our case, consultation services. Enter the dollar amount. It's $500 and save and close. Now, once the invoice is sent, QuickBooks records that the customer owes you money, so this increases accounts receivable. Once your customer pays you, click plus create and choose receive payment. Select the customer. In this example, it's still Amber Scott. QuickBooks will automatically display any open invoices for that customer. Check the invoice being paid, enter the payment date, May 2nd in this example, check the payment amount, and choose where to deposit the payment. All right, if the customer paid you through electronic fund transfer or EFT, ACH, Zelle, or another payment method that goes directly into your bank account with no processing fees, that's the key word, no processing fees, you can typically deposit the payment directly to that bank account. A good rule of thumb is this: if the customer payment equals the amount that will hit your bank account, deposit it directly to the bank, no problems. Then click record and close. This then reduces accounts receivable because the customer has now paid their invoice. This is a great segue into one of the most powerful features in QuickBooks Online, the bank feed. QuickBooks downloads transactions directly from your connected bank and credit card accounts. So to get there, click on All Apps, and across Accounting, click on Bank Transactions. Now you can see my checking account, savings account, and my credit card account. You'll usually see one of two options on the right-hand side: Post, or yours might say Add, or Match. Post or Add means the transaction does not already exist in QuickBooks. For example, if you bought lunch at Burger King for $22.15 with your debit card and never entered the transaction elsewhere, you'll choose an expense category, and that is meals. Enter the vendor name, Burger King, and click Post or Add. When using Post, it's a good habit to enter the vendor name. This makes transactions easier to find later and gives you cleaner, more useful reports. Match means the transaction already exists in QuickBooks. For example, if you previously entered a sales receipt, an invoice payment, a bill payment, a transfer, a check, or a bank deposit, QuickBooks may recognize it and suggest a match. Remember Amber Scott's $500 payment that we just recorded? When that $500 deposit downloads from the bank, QuickBooks recognizes it and suggests a match. All we need to do is confirm it. So whenever possible, use Match instead of Add or Post. Matching helps prevent duplicate transactions and keeps your books accurate. So I'll click Match now. Let's go back to invoicing customers. Click Plus Create, then Invoice. Let's say Chris Ford owes us $350 for consultation services. Enter the invoice number. Date the invoice May 17th with terms of net 15, save, and close. Now let's say Chris pays us on June 1st. So go to Plus Create, Receive Payment. Select Chris Ford, and you'll see the open invoice. So check the invoice, enter the payment date, June 1st, and choose where to deposit the payment. So let's pause and think about this. If the customer paid with a physical check, I recommend depositing the payment to undeposited funds. Later, when you're ready to take the check to the bank, click Plus Create, Bank Deposit, choose the deposit date and the bank account, and then select the payment and save. Now, let's look at a slightly more complicated scenario. Suppose Chris pays through Venmo Business. Venmo Business charges processing fees, and the same concept applies to other merchant processors such as Stripe and PayPal. In these situations, I recommend depositing the payment to undeposited funds first because there's an extra step involved. Let's say Chris pays $350 through Venmo Business, but only $343 is deposited into your bank account because Venmo Business kept a $7 processing fee. So when recording the payment, deposit it to undeposited funds. Record and close. Next, go to Plus Create, Bank Deposit, choose June 1st as the deposit date, select the bank account, and check the $350 payment from Chris. Then scroll down to the section where you can add another line. Enter Venmo as the payee, select your merchant processing fees expense account, and enter -7. So this is key. You have to add the minus sign, -7. Save and close. So to prove my point, let's look at the bank feed. Now, the bank deposit equals the actual amount that hit your bank account, $343. When the $343 deposit downloads into the bank feed, QuickBooks will be able to match it automatically. If you deposit the full $350 directly into the bank account and don't account for the $7 fee through a bank deposit, the downloaded deposit of $343 will never match correctly, creating unnecessary cleanup work later. All right, we're about to create bills. In case we haven't met yet, I'm Catherine Silverio, owner of Silver Bullet Bookkeeping. If you're a business owner and you need help with your books, call, text, or email me and let's schedule a free discovery call. Now let's create bills and switch over to the vendor side. A bill is money you owe someone else. For example, if the electric company sends you a bill today, but you won't pay it until next month, enter that as a bill. So click plus create, bill, choose the vendor, Colorado Utilities. Enter the date, May 25th. Enter the bill number. Select the expense account, in this case, utilities. Enter the amount, $476.25. Hit save. QuickBooks then records that you owe the vendor money. When it's time to pay that bill, don't create an expense. Instead, click plus create, pay bills. Select the bill you're paying. Choose the bank account. Either write a check number or simply type EFT for electronic fund transfer. Enter June 10th for the date and save. So this clears the bill from your accounts payable balance. Let's check the bank feed. Once the payment clears the bank and downloads into the bank feed, QuickBooks will typically recognize it and suggest a match, allowing you to connect the bank transaction to the bill payment you already recorded. So let's click match. Let's talk about transfers. Transfers move money between accounts you own, such as moving money from checking to savings. When a transfer downloads into the bank feed, do not categorize as an expense and do not choose an income or expense account. Instead, click transfer. I like to start with the account where the money left. So for example, if $250 moved from checking to savings, go to the checking account's bank feed, click transfer, and select the savings account as the destination. QuickBooks will often create the other side of the transfer automatically. If it doesn't disappear from the savings account's bank feed, simply find the transaction and click match and find that transfer. So remember, transfers are not income and they're not expenses. They're simply movements of money between accounts you own. Now, credit card payments work similarly to transfers. When you pay your credit card from your checking account, that's not an expense because the expenses were already recorded when you used your card. So let me show you what I mean. Here's the credit card account. Let's go to posted transactions. We had a $75 purchase at Home Depot, $150 at Amazon, $100 at Walmart, and a $75 purchase at a gas station. That's $400 of expenses that have already been recorded in QuickBooks. Now let's say you want to pay this off. Let's look at pending transactions. I see this account received $400. When paying from your checking account, you're not creating a new expense. You've already recorded those expenses as seen in the posted transactions. You're simply paying down the credit card balance. I see this all the time, friend, when I'm cleaning up new clients' books. They'll go to the checking account and choose expense and choose the credit card account. That ends up double counting the expenses and overstating deductions. Instead, when the $400 payment downloads into the bank feed, choose credit card payment, not an expense category. Then select the credit card account being paid. This reduces the checking account balance and the credit card balance without creating duplicate expenses. So I see the word pair, so I'll post this and automatically QuickBooks removes it from the pending side to the posted side of the credit card feed. Finally, let's look at the 2 reports every business owner should review regularly. But before we do that, let me post all of these transactions so we have something meaningful to review. Let's start with the income statement, also called the profit and loss report. So go to Reports, Standard Reports, Profit and Loss. So this report shows income, cost of goods sold, expenses, net income. In other words, it tells you whether your business made or lost money during a specific period. So choose the report period You have plenty of options, but I usually choose last month. And this is a rolling period. So if it's June, QuickBooks will show May. If it's December, it'll show November. You'll also want to choose your accounting method, either cash or accrual. I like to customize this report. Under Customize, I go to Number Format, and I choose to emphasize negative numbers in red. Then I click Apply Changes. Generally, you don't want to see red numbers unless it's a contra account, such as discounts given to customers. A red net income means your expenses exceeded your income for the period. I also like adding the previous period and dollar change columns. Look here. Seeing this month's activity next to last month's helps me quickly identify unusual transactions, large fluctuations, and trends that may need further review. So once you've customized the report the way you like it, click Save. The next time you run the report, your customized version will be available and ready to use. So you'll find that here. Click Report, Custom Reports, not Standard. And there it is. Now, let's look at the balance sheet. Go to Reports, Standard Reports, click on Balance Sheet. So the balance sheet shows bank accounts, account receivable, assets, loans, credit cards, accounts payable, and equity. Think of it as a snapshot of what your business owns and what it owes on a specific date. So just like the profit and loss, choose the report period. I'll choose last month. Choose your accounting method, cash or accrual. I also like showing the previous period and dollar change columns. It makes it much easier to spot changes and unusual activity from one period to the next. If you want, you can compare to the previous year as well. I customize the number format here too and make negative numbers show up in red. That way they jump out at me right away. Some accounts are expected to have negative balances, such as accumulated depreciation and owner or shareholder draws. But if you start seeing red numbers in places you wouldn't expect, that's usually a sign that something needs to be investigated. So the balance sheet is one of the first reports I look at when reviewing a client's books because it tells me where the business stands financially as of a specific date. And that, my friend, is your QuickBooks Online tour. If you're not ready to leave yet, check out the next video I made just for you right here.